Jim says an hour ago, bears make money, Mr. Plotkin. Bulls make money, Mr. Gill, but hogs get slaughtered. Ooh, that is... And then it goes, and it's a link to realmoney.thestreet.com. Declaring victory is an art. Okay, let's look at what this is. If you guys are just joining us, this is what deep effing value Mr. Keith Gill, who testified yesterday before all of Congress and did an amazing job. I did a compilation of exactly what he said, but he just tweeted something, and now we're going to have to follow him because he is the face of the movement. Let's see. Declaring victory is an art. Neither Gabe Plotkin nor Keith Gill understands victory. Neither understood humility for that matter. The stock market at times is nothing but a weighing machine, not of the long-term worth of a company, sorry, Mr. Buffett, but of the short-term causality of hubris and greed. Bears make money, Mr. Plotkin. Bulls make money, Mr. Gill, but hogs get slaughtered. I was fascinated by the congressional hearings, as so many of you were. I do get tired of hearing how everyone grew up poor. Give me someone who descended from the speedwell, for heaven's sake. But what I found most salient wasn't whether Robinhood sided with anyone. They colluded with their app, from what I can tell, not with Citadel, but the piggish nature of the antagonists. There's a Gabe Plotkin from Melvin Capital proudly boasting about being short GameStop since 2014. There's the kitten talking about how he still believes in the story. Oh my, Plotkin had one of the greatest home runs of all time when he nailed that GameStop's model was about to be upended by direct to consumer. But he turned it into a triple play, almost unassisted because of events, but egged on by WallStreetBets people, and he didn't seem contrite about one of the biggest mistakes in investing history. Too greedy to take the win. Gill, he's long and he's not going away even as he had $300 to $400 in his grasp. In his grasp, there might never be a bigger win. More power to him that he figured out that you could break the shorts simply because of an inability to find a borrow of stock at any price that was cheap enough to maintain the shorts. If you guys are still unaware of this concept, that was one of my very first videos. I explained it with dog food about how to squeeze over shorted stock. Let's deal with the matter at hand. GameStop is like a handful of retailers still in the mall. Specialty companies like Williams-Sonoma or Toomey or maybe even Foot Locker. In each case, they sell something that can be bought there or bought online. In each case, they are going to be survivors, but they are challenged in their own way. Toomey, a small specialty store, needs to become bigger than it is, but for what that it must come public and buy someone else to become the mall-based tourist store which is actually needed. Williams-Sonoma is disrupting itself, and with its different divisions now largely being driven by online. It is the best transformation I have seen of its sort and would be terrific template for GameStop. Foot Locker is being exposed as a company that, like GameStop, is not a channel that the merchants like, but there is no hardware component here. GameStop could transform itself by abandoning the small store format and move into the myriad vacancies in the same mall. They would have to negotiate many leases and get generous build-outs. In the end, though, they have to figure out what merchandise to sell once the gaming pipe is failed. Plus, they have to be careful not to fall into the trap of the end of the pandemic, as Take-Two is now after a fantastic quarter. So, the question is, did Melvin walk the mall? Did he not see how it could be done and realize there was a path, Williams-Sonoma or bigger to me, and that path could be taken if the people from GameStop hadn't gotten such bad legal advice that it was okay for insiders to sell, but not the company itself? Did Gill not see the plan that the now invincible magical Ryan Cohen could come up with would never get the stock to $300 and that shorts to go bust, alleviating the pressure upward? Did he really think that GameStop had the money on hand to expand to adjacencies? Did he honestly know retail at all? Or was it all from the percentage short, which meant there was a price to declare victory at? We can rail all day against Vlad Tenev or decide that stocks are stonks and YOLO is an investment advice and rocket ships signify the distance stocks can travel. Or we can say, guys, declare victory and go home. Oops, too late. Hogs got slaughtered and one of them still doesn't even know it yet. Wow. That was something else. There's a lot of comments on this. The tweet is from like 7 minutes since I started reading, so like roughly like 15 minutes ago now, 12 minutes ago. If you guys like that reporting, go ahead and smash that like button, because this has a lot of fat to chew on. And if you wanted to hear me live on the live stream talk about exactly what I think, go ahead and follow me whenever I go live. Turn on that notification bell icon when you subscribe so that you know when I go live, and I will see you guys next time. Peace.